Hi, my name is Roger Schlitter. This video is actually about what is a better option, either buying equipment or leasing equipment. A lot of people, will tell you that leasing, oh, it's very expensive. Oh, there's all sorts of tax implications. Really, the decision between buying and leasing equipment really depends on various factors and specific needs of your business. I'm going to list a few considerations for really both options, buying equipment and leasing. For buying equipment, ownership. When you buy equipment, you own it outright. This can be an asset on your balance sheet and have many tax advantages. Not a whole lot, but several, such as depreciation, deductions. Smaller items really can be expensed in the year that you buy them. Larger items really must be depreciated over a number of years. Long-term cost. While the initial upfront cost of purchasing equipment is higher, over the long term it can be more cost effective than leasing. Once your equipment is paid off, you can use it without ongoing payments, and that's pretty important. At least if you have an asset that doesn't change a whole lot from year to year. Customization. You have the freedom to customize or modify the equipment if you buy it according to your specific needs. Then the asset value. If you buy equipment, asset value really depends on the type of equipment. It may retain some residual value, that is beneficial if you decide to sell it or trade it. So buying can be better than leasing under certain conditions. Now leasing equipment. Leasing equipment definitely has a lower initial cost. Leasing often requires less money up front, making it an attractive option, for businesses with limited capital. And many businesses have limited capital, especially when they're starting out. The entire payment is expensed each month on your P&L statement, so it really does lower your income, and you will pay less taxes because of that. Leasing is usually an off-balance sheet item, so the equipment will not show up on your financials except as an expense. Up-to-date technology. Leasing really allows you to regularly upgrade to the latest equipment, which can be crucial in industries where technology evolves rapidly, like computers or really any computer-related or medical health-related equipment that you would have. Maintenance and repairs. In many leases, the responsibility for the maintenance and repairs fall on the leasing company. And that reduces the company's burden, of money, especially when you get into the either high-end computers or high-end health equipment. A lot of these, if something goes wrong, it's very expensive to repair. So leasing would probably be a better option for some of those. Plus the technology changes pretty quickly. Flexible terms. Leasing agreements often will offer flexibility in terms of the contract length and the end-of-term options, provided they also provide adaptability to changing business needs. Usually the end of the contract means you own the equipment for a small payment. Most leasing companies, they really don't want the equipment back. Especially if it's equipment that over the years becomes obsolete. They don't want it back. Anyway, leasing helps with the conservation of capital. Leasing can free up capital for other business needs, such as expansion, marketing, or just hiring employees. Considerations for your decision on either whether to buy or to lease. The main one would be cash flow. Evaluate your current cash flow and determine how much capital that you can really allocate to equipment. Equipment lifespan. Consider the expected lifespan of the equipment. If it becomes obsolete quickly, then leasing is probably a better option. And like I said, high-end computing, or any computing really, and then also the health equipment can be really things that just change all the time, the technology. Tax implications. For those, you really need to consult with a tax professional to understand the tax implications of buying versus leasing for your specific situation. And then remember, I'm not an accountant, I'm not a lawyer, I don't pretend to be. I do have an MBA. Most MBAs think they know everything. but sometimes you really have to speak to a professional accountant or and that could probably, I guess you would really rather it be a CPA or an attorney. Business stability. If your business is in a stable and predictable industry, buying may be more feasible. For businesses with fluctuating needs, leasing offers greater flexibility. Future needs. Consider your business's growth and future equipment needs. Leasing can a lot of times be more suitable if you anticipate changes in your requirements over the years. Ultimately, there's really no one-size-fits-all answer. It's essentially, carefully analyze your business's financial situation. That's the number one. And then in future plans. And then also equipment requirements to make an informed decision. Like I said, leasing is usually better if the asset will become obsolete quicker. And usually it is better if the company really needs to conserve capital to use in other areas, because leasing will be initially cheaper. It will be, you'll have that payment every month, which actually it'll probably end up being more expensive over time, but initially it's cheaper, to get that product and start making money in your business. Please subscribe and hit the bell icon for future videos. Please also give it a thumbs up if you learned anything. My name is Roger Schlueter, and I will definitely see you in the next video. Thank you very much.